Good afternoon, everyone. Welcome to Hit the Bid here on August 3rd. This is Ty Robbie here with your Week 31 Market Watch. Today we're going to be checking out our charts and seeing what happened across the markets last week. We did see some nice action all week long. Seeing this cattle market finally getting a pullback underway after a nice rally throughout the month of July. Also seeing some downside coming in here late in the week on Thursday and Friday for the stock market after an impressive rally throughout the summer. So these markets definitely showing pullbacks in a very strong environment here and a very strong markets that could lead to some good opportunities waiting for us in the week ahead. Other than that, we saw a pretty quiet week over in the corn and oil markets with oil prices staying range bound here between 65 and 70 bucks, while this corn market just kind of hung steady here between 409 and 415. So pretty quiet over in those areas, but definitely have some good opportunities waiting for us as we head into week 31. So let's jump right in and get started. First up, we got our October live cattle. We did see this market jump out to a hot start early last week and with the gap open higher on Monday and showing a nice rally up into new all-time highs across Tuesday and Wednesday's action. We did see that all-time high printing up there at 230.42 on this October live cattle contract. This market broke out of the top end of this trend channel and just kind of got up here into overextended, overbought territory. We did see that volatility start to increase there on Wednesday, and just kind of a good recipe for a climax top there before seeing that breakdown on Thursday. We did see Thursday's action just start selling right off that opening range and pushing all the way down to a limit down move at one point in the day. We did see a good balance day here on Friday, showing the bulls are slow in the selling pressure, so nothing catastrophic here, just a nice healthy back and forth action, showing a nice pullback getting underway here in a very strong market. The bulls supporting this October contract here at the low end of Thursday's range on Friday, balancing out here, offering some good opportunities and levels to trade around as we head into the new week. As we go into week 31, we can see here that this prior week's low here at 222.5 is going to be our bear pivot. With this big sell-off that we saw on Thursday after a really strong rally over the last 5-6 weeks, we do expect to see a little bit more selling pressure come into this market and retest some of these key levels down below, which would be a healthy corrective move for this very strong market and a nice uptrend. We would like to see this market pull back to a little bit more deeper value areas and pick up some buyers at some lower levels. We do have plenty of levels to keep an eye on as we head into the new week in the event of offers below 222.5. If we do see early offers below this bear pivot, we should see this thing get marked right down here to this 20-day moving average, as well as this zone that we kept an eye on last week as well. The line is a little bit blurry here, but between 220 and 221, we definitely have some relative highs and relative lows that are marking out a pretty clear level here that this market will get marked down to in the event of offers below 222.5. From there, we'll have to wait and see how the bulls react at this 20-day moving average and see if they can support this level. If they are unable to do that, we should see this market push down here to this 216 to 216.5 area. Back here in the early part of July, we did see good support as well as a prior swing high here in early June. So this 216 to 216.5 level will be another spot to be looking for buying opportunities with this 50-day moving average that will be rising up into that area as well. So plenty of supportive action, or plenty of supportive levels down below that we would like to see this market find and show some good value, deep value areas for a potential rally to come from there. This big picture uptrend still remains intact, and we expect to see this cattle market to continue rallying into the late summer and into the fall. We just might need a little bit of a deeper pullback here to find some good buyer support and keep this market marching higher. In the event of early bids above 225, however, which is our bull pivot on the week, and just right here around Friday's high, above 225, we should see this market just start to slowly drift higher back up here towards this 230 area. We could see a good back and forth action as we do have a pretty nice increase in volatility here at the moment, so be ready for some wider ranges. But this market should see a little bit steeper pullback. We'd like to find some good value areas to be buying this thing for a potential rally here throughout the rest of the summer and into the fall. Look for the upside in the cattle market to continue as we go down the line here. Similar action all throughout these back months, showing good strength here and supportive action on Friday and all the way out to these early 2026 contract months. So be looking for buying opportunities in the week ahead as this cattle market should continue rallying, just needing in near-term pullback here to help clean this market up. Let's jump over to the feeders now. Same story over here. Nice early rally in the week, gapping higher and pushing up into a new all-time high. We did see the all-time highs print on this feeder market here on Thursday morning early, off that opening range, printing that all-time high at 341.05 before selling off and seeing a $10.50 range day. Good supportive action on Friday, undercutting Thursday's low and rallying back and finishing the day on the highs there on Friday. Basically unchanged on the week after that early rally up into new all-time highs and that pushback. We did finish the week right here just above previous Friday's close, showing this market really not going anywhere last week despite the large ranges. This market also pushed out here above this trend channel, showing some pretty climax top type action here on Wednesday and Thursday, and this market was very much in need of a pullback as well. This market has been very impressive and showing its strength, but a nice healthy corrective move here would be good for this market to continue a nice sustainable rally here throughout the rest of the summer and into the fall. We can see here down below, if we do continue to get offers below this bear pivot here at 329.75, we should see this thing marked down here to 326.5. That'll be the next stop to the downside for the bears and be right here around this 20-day moving average. Just like that fat cattle market, below this level, we should see it marked down here towards 319 to 320 on this September feeders contract and potentially find good support from this rising 50-day moving average. We got plenty of areas down below to find support. So we would like to see a little bit deeper pullback to some value areas for the bulls to sustain this rally throughout the rest of the year. However, if we do just get early bids above 334.40, we could see this thing just continue to drift back up here towards the 340s and keep this uptrend rolling. This big picture uptrend, it still remains intact, and we expect to see it continue higher throughout the summer and into the fall. But a little bit of a deeper corrective move would be good here for a healthy market action in this cattle market. But we do expect to see over the long term, see this cattle market continue to rally over the next couple months and into the end of the year. We can go down the line here, and we are seeing really nice strength here, good supportive action on Friday, pushing back off of those lows all throughout these back months and into the early 2026 contract months as well. This cattle market remains robust and strong, and we expect to see the upside continue. We might just need a little bit more of a downside here in the near term to find some deeper value areas and keep this market rolling in a sustainable way. But this cattle market remains strong and healthy, and these dips should lead to good buying opportunities. Over to the December corn futures now. This December corn futures contract continued to see some downside last week as well. However, most of that downside was contained to Monday and early Tuesday's action. We did see that Sunday night open up here right around the 419 area and seeing that selling pressure kicking in throughout Monday's action. And then Tuesday we saw this range form here between this 409 to 415 area, and throughout the rest of the week we saw this market just continuing to chop around this 6-cent range. This big picture downtrend remains intact, and corn prices are expected to continue getting cheaper here throughout the summer. This market just kind of getting comfortable here in a nice little tight range late in the week and balancing out, not in a huge rush to go anywhere. Still very little volatility here in this corn market, but the downside should keep pushing this market lower. After this balance here throughout the last 4 days of the week, we do have our pivot points set here at 409 and 415. Continued bids above 415, we could see this thing cut back across into these moving averages. We've got plenty of resistance overhead, so upside should be very limited in this corn market, barring any major cataclysmic news events, but be looking for this market in the event of bids above 415 to hit some resistance up here in the 420s to 430 area and see those bears continuing to push this market lower. At the moment, though, we do expect to see early offers below 409 carry this market down here towards new contract lows and put pressure down here on this $4 mark. So look for corn prices to continue getting cheaper as we head into week 31. Next up, we have the crude oil market. As we got into last week, this market did seem pretty heavy, and after finishing the 25th of July down there near the lows, right here on top of the $65 level, we were needing to see continued follow through down here below this prior swing low at $64 and this breakout point before the Iran situation blew up back in June. So bears will need to get this market back down below 64 for any sustained downside or any big directional moves. So in the meantime, we do expect to see this continued range-bound action like we saw last week. We did see last week this market opening up down here near 65, bouncing off of these range lows, cutting all the way back across these moving averages and towards the top end of this range. We were expecting some resistance up here right around the $70 mark. Low 70s have kept has this $65 to about $72 range has been a pretty comfortable spot for this oil market over the last year or so. And we should expect to see this market continue to trade sideways like we saw it do last week. Nice cut back across those moving averages up to the $70 mark early in the week before selling off on Thursday and Friday. Not a whole lot of respect of these moving averages here in this oil market, so we do expect to see them just continuing to trap directional traders and go back and forth here as this market remains comfortable in the $65 to $70 range, and we expect that to continue. We do need to get a nice convincing close beyond either edges of this range to confirm any potential directional moves. So in the meantime, sit back and let this market continue to chop sideways and trade this range-bound market here between 65 and 70 bucks. Last but not least, we do have our indexes. Starting off here with the S&P. This market just kind of balancing out early last week. We did have a pretty big news week last week with the FOMC meeting, as well as some big jobs numbers that this market was looking forward to. Everyone's blaming the Fed data and jobs numbers on this sell-off. However, this market has just been up here in extremely overbought territory for the last couple of weeks and showing a really strong rally off this 20-day moving average dating back to June here. So we have had about 6 weeks of straight upside here, pushing up into really overbought territory. So a sell-off was long overdue here in this equity market. Don't let the bad news bears get you too bared down. This market still remains very strong and healthy, and we expect to see good buying opportunities come from this. At the moment, we did see the selling pressure kick all the way down here towards 62.40, which was this prior range that we saw between in the early to middle part of July. We did see good support down there at that 62.40 level coming in on Friday. If we can take a look here on our lower time frame, we can see this market selling off all day Thursday and into Friday's action, showing good support down here right around 62.40, bouncing off and balancing out here in this area. As we head into the new week, we'll need to see how the bulls respond to this. If they're able to hold the 62.40 level, we should see this thing turn back up towards these all-time highs and get moving back up that direction in a hurry. However, if we do get offers below 62.40, we should see a pretty quick mark down here to 61.50, just undercutting this 50-day moving average and testing some of these prior swing highs from late 2024 and Q1 of 2025. These prior swing highs are going to act as a good support area in the event of a breakdown early in the week below our bear pivot. So be looking for support to come in here at this 50-day moving average down here to the 61.50 level as well. Lots of areas to be looking for good support here. Be looking for good discounts on some stocks here. This market remains very strong and healthy, and we expect to see the rally continue here. Just need to see this market continue to find good supportive action, balance out, and see rallies come from some of these key levels and key moving averages. So that's something we'll be monitoring as we head into the new week. But in the meantime, wait for this near-term pullback to kind of sort itself out, and we'll be ready to take advantage of some good buying opportunities on some discounted stocks in the new week. So equity markets remain strong and encourage a bullish bias here. The NASDAQ has been the strongest over the last few months here, and we are just getting down here undercutting that 20-day moving average and pulling back a little bit here. So we could be seeing some good support down here at this 50-day moving average as well, which coincides with some of these prior swing highs like that S&P contract. The Dow has been the weakest. We did get a breakdown below that 50-day moving average, and that's some good selling pressure all week long last week. But we do expect to see buying opportunities come from this as well. Good support point down here at 43,200, which was that prior breakout level. We could see support step in down there. Be looking for these Dow stocks to offer some good buying opportunities as well. So that's what we got to look forward to as we head into the new week. We do have just a couple minor news events to keep our eye on. We do have manufacturing data coming out on Tuesday, which isn't that big of a deal, but we do have some jobless claims coming out on Thursday morning before the open. So just some minor events to keep our eye on as this market will be watching those as we head into the new week. But plenty of opportunities waiting for us, and we'll see what the new week brings. That's all we got for today. Everyone have a good night. We'll see you tomorrow for closing comments.